Doug Lepisto, welcome to Acquiring Minds.
Thanks so much, Will. Great to be here.
Doug, you're building Sleeping Giant Capital. Sleeping Giant is a blend of a variety of models we've seen in the search world and in the long-term hold world. And you've innovated a key ingredient, the place-based nature of Sleeping Giant. We're going to spend quite a bit of time on that. But start us off with a little background on you, please, Doug. Then we'll move into the origins of Sleeping Giant.
Sure. So I come from, I would say, non-traditional mix of influences and backgrounds to get to where I am today. It's been a journey bouncing between the professional world, the business world, and academia. And I don't know why I keep going back and forth between these two worlds, but that's really been my trajectory. I mean, I started off, went to college, no business classes. I went to a liberal arts school, psychology major, thought I wanted to do something in psychology. My girlfriend
you
and
are,
wife.
Doug. You are.
Yes. Yeah. Well, it's true. So I spent some time in advertising, and then I got a master's at University of Chicago. Thought I wanted to get a PhD in sociology. Then I left that and went into management consulting at Monitor Group in Chicago. Did a lot of corporate strategy, pricing strategy. And so that was the bounce back into the business world. And I bounced back into academia again and got a PhD at the Boston College Carroll School of Management in management organizations. And so did a traditional research-based PhD and dissertation and everything. And then started up as a professor at Western Michigan University in the Hayworth College of Business and tenure track doing the publish or perish path and teaching. And I went through that, and then kind of a series of things here over the last 5 years. We started Sleeping Giant. And so I founded that with my partner, Derek McIver. And so continued to be a professor at the Hayworth College of Business and also run Sleeping Giant. So my trajectory has always been that mix of higher education, explaining, let's say, and then doing on the business side. So I think I finally maybe resolved that with my current arrangement of living in both worlds at the same time.
And so is that to say that what kept you going back to academia is that you like to teach? Question. That's the question. We this audience will understand why you liked business. We're all drawn to that. The question is, what about academia drew you so much that you just couldn't quit it?
Well, so I really enjoy some of the teaching side of things. I mean, to me, I was thinking about in preparation for our conversation, what really motivates me about everything I'm doing, and it's really the opportunity for life-changing moments, and that's with undergraduates, that's with aspiring owner-operators, that's with sellers. And so I still continue to enjoy that part of academia is working with young people. But I think the other thing is there's just a huge amount of value in a business PhD. I mean, I think, I was at a board meeting yesterday and they're teasing me, piled higher and deeper and Dr. Doug and, these kind of, business schools are irrelevant and professors are irrelevant. And I think there might be some truth to that, but I also think that if we think differently about what that degree can offer in terms of how it changes how you think and how you approach problems, and how you can draw on best practice in science. I mean, there's a reason why Adam Grant is the #1 podcast probably in the world that focus on business. He's a PhD, and so I think for some good reasons, PhDs have gotten a bad rap, but I think there's a ton of value in that degree, and I think it should be more like an MD. MDs are out practicing surgeries. They're teaching future surgeons how to do surgeries, and they might be doing research and innovation about better ways to do surgery. I think that's a much more compelling, vision of what a PhD should be than somebody who's, locked up writing a bunch of papers and not really engaging or doing anything in the real world.
Yeah. No, you certainly get to have the best of both. And boy, do I imagine that it gets old hearing business types tease you about being in academia. Business types love to beat up on professors. Those who can't, Those who can't teach. Boy, that's got to be charming when you hear that all the time. Of course, you are doing. So that's your retort.
That's I think we're hopefully doing in a way that's better than they can do.
Yeah.
And so I enjoy in some ways the teasing and the ribbing about that. And I think it's, in some ways it's well earned, but hopefully I'm forging a path for others to, consider when they join a business school or get a PhD, that they think more broadly about what that means as a career, rather than a typical, lock myself away and publish for the rest of my life. So,
Yeah. Yeah. Well, Doug, I, in some ways, feel an affinity for this. I share the sensitivity about it because as a podcaster talking about and frankly, educating, but not having bought a business myself, I could be accused of the same.
There's a fundamental thing here about, doing and explaining, doing and understanding, that you need both of these abilities. And, yes, you don't need to get the theory of the golf swing to be great at golf. You don't need to get the theory of the golf swing to go hit great golf balls. But, the understanding some of the physics and the mechanics and best practice, I don't think that we should just throw the baby out with the bathwater and say, well, that's science and the things we strive for in terms of understanding, expanding understanding is irrelevant. But no, I don't fit in either world. The business people think I'm an irrelevant PhD. The PhDs think I'm a evil private equity, capitalist, barbarian at the gate. And so I fit in no worlds all the time.
Well, that I feel like that's a good metaphor for sleeping giant itself, which is also a bit of a mutant, to use your word to describe it. We'll get there. I'll say one more thing on this notion about business schools. You said a minute ago that some business types you were talking to the other day were like, oh, business schools, I guess, are irrelevant. And it's funny, I come from, my kind of first half of my career was in tech. And historically in tech, they were very dismissive of the MBAs. This has changed a lot because tech has become the establishment. So everybody goes to tech now. But back when I started, tech was still the domain of geeks and coders and purists and sure capitalists, but not the business types, not the MBAs, not the number guys. And I had that bias just because it was baked into me from an early age. And being exposed now to so many people who have gone to business schools, including the very top business schools, I mean, it just could not be further from the truth. I mean, I'm constantly, of course, impressed by so many people in this world, and what they learned in their business programs. I mean, even MBAs themselves will joke that business school is more about the connections you make than what you learned. But my impression is that a lot of these people who went to these business schools learned a hell of a lot while they were there, because they certainly, I have a deficit where they don't in some of the knowledge. So anyway, it's been eye-opening for me, and I really wish I had gone to business school at this point. Okay, back to you, Doug.
Well, that's also I think an outdated. I mean, you think about the world the last 5 years. I mean, we were already thinking at the time, my partner Derek and I, about the future of higher education. It's like, well, you could basically teach yourself on YouTube. And then the pandemic happened, and then it was like, okay, well, you really can teach yourself with YouTube. Yeah. And now you've got, and that was before AI, and now you've got AI, and AI can teach you. And so, what is the value of going someplace to have people talk at you about something? That's kind of an irrelevant idea now. The knowledge dissemination as a concept is totally irrelevant. It might have been relevant years ago when you had to go to somebody to hear something and learn something, go to the library to actually get knowledge. That is an irrelevant idea. And with AI, the knowledge generation function of a university, that's also going to become, in my opinion, irrelevant. And so if knowledge dissemination and generation are these ideas, these purposes that universities once stood for, I think technology is undermining what those things are. And so the question is what is that need to be in the future? So I think, it's relevant. It was relevant in the past. I think there's going to be a lot of change around that in the future.
Yeah, no, it's a very interesting time for higher ed, and we haven't even touched on politics.
True.
But if you want to take what you just said to the far extreme, you'll hear tech utopians say that knowledge itself is about to be rendered irrelevant, because if you can just tap ChatGPT to tell you what you need to know on demand at any moment, why pack all that into your memory banks when it's just there to, at your fingertips?
Yeah.
So pretty provocative. Great, Doug. Well, so now let's turn to the subject of today, sleeping giant. Tell us the origins of this, and then we'll get into the definition of what exactly it is.
Sure. Sleeping Giant really started with my partner Derek and I just kind of observing a few macro trends and kind of putting those pieces together. So the first thing we saw was we were both professors, still are professors, but we're looking for something that was going to change the trajectory of our teaching and really make an impact. And we were scouring around, and Derek came across a case on how to buy a business from the folks over at HBS. I did a little more research, and it's like, okay, wow, that's kind of interesting. This was back in 2019. The most popular class at HBS at the time was ETA, right? And that was before we understood what ETA was and search. And we looked at the case, and what's interesting was there's a little footnote that said the author of this case, it was an HBS case, was a professor, but was also an investor. And so we thought, well, that's kind of interesting, like professor investor, like that's an interesting hybrid. And then you look at the thesis there, and it's silver tsunami, and it's baby boomers retiring, and a massive TAM and everything else, and so that made sense. And then we looked out and we said, okay, that's going to happen here in West Michigan. And so what could we do in West Michigan that would be relevant and appropriate here and adapt that model here? And then we also had these same conversations that we just had around higher ed and saying, okay, well, it's putting practice and doing, learning by doing, learning through practice is where the future is going to be if you can get knowledge and information. So, we were thinking about, well, how do we take a reinvented view of higher education and look at this trend in search? And, we kind of realized that, well, if we want to really advance teaching at an undergraduate level, and if you want to have a really legit ETA course, you need capital, you need a business, you can't just talk about it and teach it. If you're going to tell somebody to take a life-changing opportunity, and then it's like, okay, well, there's no capital around you, go figure this out with some SBA loans and some banks and kind of go off on your own. We realized that if we had a fund, we could both empower folks to follow this path and do that in West Michigan. And then we realized, well, if we had a portfolio of, 7, 15, 20 companies, all of a sudden we have an ecosystem for training undergraduates and really blurring that line between higher education and the business community. And so it was kind of a confluence of those things that we then thought, okay, we need to try to raise a fund, and the kind of journey went from there.
Let's now hear what Sleeping Giant is today, and then we'll start to unpack it.
Yeah, I mean, we have, you refer to it as a combination of multiple elements, and I think that's really what we've done, and what we've struggled with in some ways is articulating what this thing is as a bigger whole than its parts. I mean, it's got a search, a kind of a captive search fund accelerator element to it. It's got committed capital. There's a higher education component at the university that gets linked into this. And we were looking at what is the governing principle of all this, and it really centers around being a place-based alternative to traditional private equity. And let me unpack a couple of those features. So, traditional private equity, I mean, we're looking at cases where, a situation where a seller is going to be selling their business outright. These are majority buyouts of opportunities that we're looking at investing in, share similarities with what traditional private equity would do. But we're taking this place-based approach. And for us, place-based means West Michigan. That's a up to Grand Rapids, over to the lake, kind of down to Indiana, kind of over to the kind of the middle of the state. And that swath is what we are focused on in our place-based approach. And what we saw was that there's a market of sellers who do not want to sell to traditional private equity. They don't want their company bought and sold in 3 to 5 years. And there's, whether PE is earned it or not earned it, it gets a bad rap, and it doesn't have a great reputation amongst a lot of sellers. And so we with this place-based focus, we realized that, okay, well, we can access opportunities that traditional private equity wouldn't. And by being place-based, we then started to add other elements that really organize around that principle. So if you're place-based, you can't exit in 3 years. Who are you going to exit to? You can only exit the people in your place if you're going to do that. And so it incentivizes and makes sense to be a long-term fund and to buy and hold and grow these companies over the long term. If you're going to be place-based, you want to be able to be connected to the service providers in your area. And so that means creating win-win relationships with them, that you preserve service provider relationships with portfolio companies instead of centralizing or moving them to a provider into a different place. And so you can start to see, and I could go on and on, this notion of place kind of rippled through our model. If you're going to be place-based, you need to find a way that you are engaging in mutually beneficial exchanges with your community. For us at Sleeping Giant, that's with Western. You got to pick we're not supporting, different nonprofits. I mean, our model is focused specifically on creating a mutually beneficial exchange with Western Michigan University, where our portfolio companies are getting value, and that the university is getting incredible value in terms of the educational opportunities. So that place-based principle kind of ripples through our model. And so you've got some inspirations there from ETA and Search. We bring on aspiring owner operators, and they're funded through a traditional kind of search vehicle. We've got elements of the Search Fund Accelerator with the committed capital. We've got some, Warren Buffett kind of long-term holdco kind of elements in our capital structure. And then this place-based element, I think, is a little bit unique, and the connection to the university is also unique as a model.
Great, Doug. So much there. Okay, first, when we talk about the place-based nature, let's just say it up front: is this social entrepreneurship, social investing? Is this a double bottom line thing? I heard you use the word not concessionary in our pre-call, not a word I was familiar with. Explore that, please, for us.
Yeah, I think our fundamental premise is that, and I think you see this with the tariffs, you see this with remote work and coming back to the office, you see this with onshoring, that this notion that capitalism was placeless is not true. Capital is always based somewhere, and where that's based matters. And why that matters is when you're investing into a specific location and you're maintaining the control and ownership of those companies in those areas, for reputational reasons, you're more likely to create win-win exchanges with that place. I was conversation at a board meeting yesterday, and they're like, well, I have these really great, financing option for you that's off in Wall Street, and where we could actually, bring some of our financing over to them. And I thought, well, that's great, but that's not elevating where I live and providing jobs and opportunities to where I live. And so what that focus on place does is it should create better economic development, smarter win-win decisions locally. And we are doing that in a way that, yes, we want to see that impact, and we want to see that impact with our university, and we want our university to be better. But we are taking that in a non-concessionary approach. I mean, we should deliver results to our investors financially that are commensurate with a PE asset class. And so we're not a impact fund in the sense that invest in Sleeping Giant and we're going to give you a return, but it's going to be a discount. We're going to give you 5% on your money. That we think that those things can go together and that we can deliver a great return at the same time we're making those decisions both with service providers and with jobs and with the university that elevate our community.
But to press you on that, Doug, the financing decision, bringing in capital or financing from Wall Street's a great example. These businesses are going to be confronted by decisions all the time where the financial benefit could be higher by violating the place-based philosophy, right? So at some point, they're going to have to choosing to keep the financing local or regional. Maybe your terms aren't as good for the loan. And which eats into your EBITDA, the EBITDA of the business, which eats into the returns to investors. So at some point it's got to catch up with you if you're not making decisions strictly based on the numbers in this. I think you get my point.
Yeah, well, my pushback to that would be I'm getting access to off-market opportunities and sellers who believe in our long-term place-based approach. And if I start making decisions that are maybe short-term financially that get me maybe a better loan here in the immediate, but my reputation in the marketplace becomes not the thing I want it to be, well, I've undermined what my model is. And you're not going to be something that you aspire to be, and that undermines the whole thing. So I think when you take the long view, that these short-term decisions about concessions and how we think about the opportunity of saving on a loan, but if you put it to Wall Street, it's like, okay, well, but then the relationships I've built with these local banks who have referred opportunities to us, I mean, they're less inclined to send opportunities to us because they know that if you buy this company, you're gonna send their business to another place. And so, I think it's at a quick short-term view, you can see that, but in the long-term view, I think you can still create that mutual benefit in those kind of place-based approaches.
Yeah. Well, and I think allow me to put it in my own words, which is you're getting access to opportunities. That is the opportunity to buy businesses from sellers who wouldn't otherwise sell to somebody coming in from New York, somebody coming in from the coasts, private equity, whatever. They want to sell to somebody local, regional, or to an interest that is local or regional. So you're getting access to these opportunities. That's kind of alpha, to use a kind of an annoying term you probably wouldn't use with them, but that is real alpha and real differentiation for you guys, that you can buy businesses that others don't have access to, couldn't buy. And so maybe that's where also you are able to get advantage and offer competitive returns to your investors that maybe some other private equity fund would not.
Yeah, and so it's the opportunity to access those opportunities. It's the referrals that you get because you're place-based. It's because of the relationships you build that drives relationships with aspiring owner-operators that believe in your mission and believe in and want. They don't want to move, and they want to be rooted in the same place. So I think but your pushback is fair because it's things that we think about all the time, and I think that's one of the innovations or the things that we've really wrestled with is how you invest with that philosophy and still generate attractive returns at the same time, and where are those limits, and how do you think about that in the long term?
Yeah. Very interesting. Let's hear more about just the format of Sleeping Giant, the mechanics of it. So you bring in searchers. Who are the principals who are out there doing the searching and becoming the operators and part owners of these businesses?
Sure. The core functions of Sleeping Giant, let's break it down, starting with the owner operator. So folks who are interested in following this career path in our community are typically call them 30 to 45-year-old mid-career professional. They might be and are often post-MBA. They're working at a big company. Their next rotation is to Europe or to Asia. They've got 75 layers of management above them. They want to be entrepreneurial, but they don't know how to, satisfy that desire without starting a company. And so to date, this has only been word of mouth. They find out about Sleeping Giant, and we offer them a course called Acquire that my partner Derek teaches, which is a 8-week one-on-one coached course focused on ETA. And so this is individualized exec ed on ETA is essentially what it is. And they go over all the nuts and bolts of that path in that 8-week course. And after they're done with the course, they can say, hey, I learned a lot. I'm good where I'm at. They could say, this is really amazing training. I want to go out and buy a company on my own. And last check, we've had 10 to 12 folks go out and buy businesses out of that course. And they're often buying companies that are smaller than Sleeping Giant would invest in. And so we're not seeding our competition, but we're creating entrepreneurs, in West Michigan who are buying these businesses. Or they could apply as a third path. They could say, I want to come and join Sleeping Giant Capital and search with you guys. And so we've spent 8 weeks with them. And so we have a pretty good read on them as an individual, and they have a good read on us. And that's building enduring relationships. If we're not going to hold this thing for 3 years and we're going to hold this thing for a long period of time, we need enduring, meaningful, authentic relationships built on trust. And that 8 weeks starts to do that. Mm-hmm. They then apply. They join Sleeping Giant as we go through a whole rigorous application process. They join us as a CEO in residence. And then it's a typical search model where we invest in them. There's a step up in equity on a deal that they close. And then we provide the capital through our fund on any transaction that they do, and certainly always interested in them bringing capital to the equation as well. And then we find a company. Our team supports them, financial modeling, diligence, legal. We've got a whole team helping on sourcing opportunities. And then once they close, then they're off as CEO. So that's really the journey of an aspiring owner operator that could come to Sleeping Giant or might become an entrepreneur here in West Michigan.
Mm-hmm. And the economics for them are what?
So their economics are, we hope, better than any other search model out there. Last time I checked, you start to hear that it's that, 8.25, 3 tranche kind of approach. Yeah. Ours is 10, 10, 10. Mm-hmm. And a similar performance-based economics in terms of vesting or getting more equity. We're looking at some different incentive models that really take into account this longer-term hold approach. There's the IRR, MOIC, DPI, thinking a little bit differently about some of those. And so those are their economics, which I think we're offering a package that would be at least as attractive or more attractive than typical search.
Than a typical traditional search fund, leaving aside self-funded search, right, SBA, where they might own the whole thing.
Correct.
Yeah. And just to be clear on the 3 tranche style of traditional search, what people heard you say, the 8.25, 8.25, 8.25, in your case, 10, 10, 10. So that's 10% for closing, mm-hmm. 10% that vests over 4 years. Mm-hmm. So as long as they stay in the business for 4 years, they've got 20%. And then the final 10% is based on performance. As you were just saying, your performance hurdles are likely to be different than traditional search fund hurdles, which are based on IRR, I believe, and imply an exit, a liquidity event. And so in this long-term hold model that you have and that you're trying to encourage, that IRR hurdle or metric makes much less sense. And so you're trying to figure out how to gauge performance after 4 years, even though your entrepreneur is likely to continue to be in the business indefinitely, one hopes.
Yes. And so, and we continue to try to, we're continuing to innovate and think about this. It's a long conversation, right? About about IRR and then the shift to MOIC and some of these incentive plans that include MOIC, but it kicks in at a certain time period. And then it's like, well, okay, well, if we're longer term, I mean, DPI really should be, it's cash back. That really should be the notion. And, you can, and what, IRR and what that means in terms of whether you're going to expand your multiple or not, and how you think. I mean, there's just a zillion pieces that we're thinking there. I think one thing that's critical, though, that we have preserved as part of our model is that they get 10% at close, meaning, and we are not a find the deal, find the operator shop. We've really made a decision that we are find the operator, find the deal kind of shop, and you get 10% as a result of that, and it makes it much more entrepreneurial. It provides more ownership and control, and it feeling like it's their search. I mean, my partner Derek always says it's their search. I mean, they could find an opportunity at Sleeping Giant that we're not going to invest in, and we get ROFR on any of those opportunities, but they could do something else. It's their search, and so I think that again creates a different model than typical PE, where you would find the deal, find the operator typically, and those incentives wouldn't be nearly the same. Yeah.
But again, it is quite similar to the traditional search fund, where that entrepreneur is coming to you and you're deciding whether or not to invest in them. And then kind of together, or they go off and find the business, but with your support and with assuming you like the deal that they bring you, basically, 3/4 committed capital. If you like the deal, they know that they have a capital provider to buy it. Correct?
Yes. And so we are a people first shop in that we have industries that they're focused on when they come in, and we've diligenced those, and we have a point of view on what we like and what we don't like in terms of where they're focused. But we are very much find the great person, because at the end of the day, that person needs to sit across from a seller, and that seller needs to say, this is the guy, this is the girl that I'm going to transition to. So that people first kind of quality is I think critical in our model.
Now, these entrepreneurs, your searchers, you said are mid-career. So these are not freshly minted. These are not your students. Unlike in the traditional search fund model, where those investors favor the freshly minted MBAs coming out of all the top MBA schools, or the MBA or the business schools, where the traditional search funds have kind of put a stake in the ground. The traditional search fund investors have put a stake in the ground. This is not that. So your tie to Western Michigan is not actually that the students. You're not feeding the students into these positions of leadership.
Correct. We started with that as a premise that it would come through the MBA program, and what we realized is that that just really wasn't working. It wasn't a good fit, and we realized that the folks that were just coming through the MBA program weren't coming to do search. And I think at a Booth or HBS or Kellogg, you have folks who come to those MBA programs. They know they want to do search. They've heard about it. They've read about it. And so they're selecting in to do that. We had just a lot of mid-career folks that were taking MBAs to upskill. They're very happy at their current job. This notion of like leaving their company and saying to their spouse, oh, I'm going to go and take a risk for 2 years to try to find a company. It's just, there wasn't a market there. And so, and that was actually a great discovery for us, because we have had just phenomenal, more experienced, more credible folks that we've been able to back as a result of that, because they're coming from industry here in West Michigan.
Great. And so what does the portfolio look like today, Doug?
So we're going to be closing here by the time that this is airing, we'll have closed our seven investments, 7 acquisitions. And so we're in that, probably 90 to 100 million in revenue across those, and maybe 300 and some employees. And so that's kind of where we are today. We're West Michigan based in our investment. And so our portfolio looks like West Michigan. A lot of manufacturing, a lot of stuff that typical search wouldn't touch. So
because it's because of the manufacturing.
Because of the manufacturing, heavy
Mm-hmm.
CapEx, and so we have a lot of manufacturing companies, value add distribution. We're focused on some technical services now, but our investments are going to be in that West Michigan area, and you got automotive in our state, you've got office furniture up in Grand Rapids, you got med device up and down the 131 highway corridor here between Grand Rapids and Kalamazoo. You got agriculture, you got consumer packaged goods with Kellogg. So, we always look at investments into the portfolio that have a geographic reason for being there. They're close to these supply chains where they're unlikely to be moved. Mexico probably isn't a good option. And so those are the kind of opportunities that we have invested in and will continue to invest in.
And that 90 to 100 million in total portfolio revenue, how much deployed capital does that represent?
I don't know the exact number offhand. I probably wouldn't want to go into that right now.
Okay. Can we talk about how many, have you had a single fund vehicle or more, and what the size of those funds is and are?
Yeah. So I can say that, our first fund was 34.5 million. And we've also done, a few little sidecars as a part of that in the seven acquisitions that we've made. And then too early to announce, but we will be bringing to market a second fund here in the next couple months.
And directionally same size?
It'll be larger.
Ah.
Yeah.
I also just wanted to try to understand the target profile of a searcher who's working with Sleeping Giant. These are larger than SBA deals.
A typical transaction for Sleeping Giant is a enduringly profitable business. It's been around for 30, 40. I mean, we just did one that's 75 years old. Very typically consistent in terms of their economic performance, pretty boring. Often in the, call it 2 to 5 million in EBITDA size, 50 to 100 employees, usually too big for an SBA and, individual sponsor, probably not as sophisticated and large enough to be a PE platform, but in a pretty sizable add-on or a strategic acquisition. So it's kind of in that, 4 million earnings zone where it's a little bit of a no man's land, but they do get calls from PE folks and they're kind of considering that as maybe some kind of option. And especially if they get to that 4-5 size, they might even start thinking about an ESOP as an exit option, where we're almost, in competition with that as an alternative as well, exiting to their employees.
In our investing via Minds Capital, and we invest in independent sponsor deals, across our portfolio, it's about 4 to 5 million of EBITDA is the average acquisition of our sponsor deals. So you're probably bumping up against independent sponsors. So, people out there doing small groups or individuals doing private equity deals, but on a deal by deal basis, not big private equity. Yeah.
Sure.
So let's understand a little bit more about the value proposition to sellers, or I should say the competition that you have. We understand the value proposition. So a seller might consider PE. They've decided they don't like PE, or they might consider an ESOP. So just for, give the audience 3 sentences on what an ESOP is. Most will know. And then how do they choose between you and an ESOP?
So in an ESOP, they're going to ultimately sell the business to their employees. And an ESOP requires a tremendous amount of governance and a tremendous amount of infrastructure and administration to be able to facilitate, and it usually requires companies to be at a significant enough size that kind of those costs make sense. And it's usually, and there's a lot of complication around this. It's interesting. Grand Rapids is the ESOP capital of America. I think there's more ESOPs done in Grand Rapids than anywhere else in the U.S. You should check that, but I think it's.
Wow.
I've read that. So because these are closely held family businesses often, or they're second, third generation, but they're closely held. And so in ESOP, you're going to defer a check, and you're basically getting a note in 10 years. And so, you think about the time of getting your cash, and you think about the administrative kind of elements of this, that converting to an ESOP is a significant undertaking and can be done. And so that, to a seller, you're saying, well, we're going to provide you with a much cleaner solution. We're going to provide you, and often in an ESOP, if you're exiting, you might not have that succession solution. You can sell to employees, but that doesn't mean you have a CEO being, there to be able to run the business. And so we're providing them with the CEO, we're providing them with cash sooner, and we're providing that with them without the administrative overhead.
Yeah. You had said much earlier that you'll, you can't do a private equity play here and sell the business in 3 or 5 or 7 years. What do you say? What's to stop you from doing? I guess you could do that. You own it. It would undermine your brand, right? I guess. So when a seller's like, yeah, but once you own it, what's to stop you from doing that? Is the answer what I just said?
The answer is trust.
Right.
Could we buy up 20, 30 West Michigan businesses and then sell them to the coast? That would be the end of Sleeping Giant. Right. And that would be, and I think the important thing there is the reputational effects of place. When you walk around and you know that you said one thing and you did the other, you can do that if you don't live in that place. There's no reputational shame network effect of like governing some of these transactions, but I will. And so, that is an underappreciated mechanism that creates trust and allows you to do these kinds of things, because, we hear stories, sellers who have sold to private equity no longer wanting to wear their company gear to the grocery store. They're embarrassed. They know, because that has gotten out into the community. And so, it would be the end of Sleeping Giant if we did that, and we're basing our decisions on trust and authentic relationships with these sellers, and that's what we're going to do.
Yeah. Do your searchers have to already be Western Michigan based? Is that kind of something that you look to? Otherwise, some searcher coming from somewhere else could say they want to spend the next 10 and 30 years of their life in West Michigan, and they may believe it, but until they're there, they don't really know how they'll take to the place. So how do you think about where they're geographically based?
All of our searchers, and I don't think it's the wrong thing to say our searchers. The searchers we partner with, I think that's critical. They don't work for us. It's their search. And so, yes, they have partnered with Sleeping Giant, but there's, again, nothing stopping them from doing it. So they're not our searchers. They're, aspiring owner operators that we've partnered with. Mm-hmm. They have all been from West Michigan here. And one of the other reasons why place-based matters is, for us to take there's often a question like, should I take a site visit? You've had you had a conversation, you signed an NDA, you get some financials. It's like, okay, how much is here, and should I take a site visit? Well, that means getting on a plane. That means logistics. For us, we site visit all the time. Because it's a short drive for us. And so the notion of somebody being based in another place would basically require them to move here. Now, we're obviously open to that. And West Michigan's the Grand Rapids is West Michigan's consistently rated as a top place to live. It's a little it's a little haven here on the lake, on Lake Michigan. So if folks wanted to move here, yeah, but if they're going to search remotely, I'd say the odds are pretty low that they would be able to do that.
But you are receptive to people who say, I'll move there.
Oh yeah, for sure. Yes.
Oh, okay. Okay. Because what I was getting at is
to see that. Yeah, I would love to see that.
Okay.
Yeah.
Okay. Well, that obviously opens up your potential network of searchers you partner with dramatically. Everybody listening now is fair game.
Yes.
Go back, Doug, to just that flow you described of somebody coming in to work with Sleeping Giant. They do this course with Derek. It's one-on-one. What does that mean? It's a couple hours a week, and it's literally a Zoom call with Derek. What does that look like?
Yeah. So it's a 8-week session or a course. It's basically they do an hour-long either Zoom or in-person call. And there's about a month of preparation and reading that needs to be done before the course begins, and then it is tailored to the person. I get really skeptical about some of the cohort-based, these big classes being able to do search because there's just so much personalization that you need to do to be able to make this effective. And so what Derek does is that first kind of week or so, it starts to figure out. After they've gone through questions about, is this right for them, and how are their finances set up, and is their spouse, have they had a conversation with their spouse about this, serious conversation, and gone through some of those? Then the question is like, what is the path that you're wanting to pursue here? Are you wanting to do this on your own? And if so, we're going to design the path for you to be able to do that. If you want to do this with Sleeping Giant, we're going to craft it around that and focusing on a thesis that makes sense for them and really being smart about that. And so it's a really personalized one-on-one experience where you are going to get, someone who has done it, who has, facilitated both, transactions through Sleeping Giant and through, independent, kind of independent path. But that personalization, I think, really matters a lot to crafting it for this person, because this is not a certification. This is not like I'm going to get a little extra thing. This is about a life-changing decision. And so that personalization matters.
And how I heard you say, Doug, I've heard you say a couple times, I think, that they can go through that experience with Derek, those 8 odd hours plus their own homework and prep, and then choose not to work with Sleeping Giant. How do you guys protect yourselves against a lot of wasted time? I understand that you're trying to seed entrepreneurs in the region. So there's some knock-on benefits, even if they choose not to work with Sleeping Giant. Same time, Derek's time is valuable. It doesn't scale if you just have a lot of people coming through and choosing not to work with Sleeping Giant. So there's got to be some mechanism there whereby you are hopefully selecting for people who will actually work with Sleeping Giant.
It's really a diligence question, right? You sit down with these people it's just getting a read of where they're at and what they're trying to do. And to your point, it's about a portfolio of folks where we're not going to be taking 100% of people into this course that make no sense for Sleeping Giant. That doesn't make sense. But we're open to folks who might come through and see this as a path that they want to do. If they came in and they said, hey, I want to go buy a tech, I want to, a B2B software business in California, they're probably not a good fit. And Derek would say that, and this is not probably the right path for them. But they're thinking about, West Michigan, or even an individual search, maybe on something smaller. I think that's something that we're open to. Again, we're not seeding our competition typically with the training of folks who might go off and do this on their own. And again, it's about trust and what they want to do. And you mentioned that what's to prevent them from, going off and doing it on their own. And for us, it's also like, there's plenty of people that have gone through that have applied that we don't take. There's no guarantee you take the acquired course, you're getting a Sleeping Giant. I mean, we get 8 weeks with you. So we really get to know you as a person. And as a part of that course, I should also mention is that there's also time that they get to spend with, Kamola, who is our financial analyst. I sometimes, take a few conversations, so they get exposed to the Sleeping Giant team, in addition to just a face on the education. So that's kind of how we have currently thought about that question, but it's something we think about.
Yeah. you don't want to say what your second fund size is, but can you give us some sense of how big this could get? Because the other thing about place-based is the TAM is a low ceiling. So, it's constrained by its very nature. And that's all well and good, but there is a ceiling to this. There's only so many companies in Western Michigan, so many sellers, so many retiring sellers. And if you're doing kind of systematic outreach to them all, after a few thousand emails, you've emailed them all once, sort of thing. So how do you think about the ceiling on this?
It's a great question. It's something we think about. There will be a limit, as in all markets. There is a ceiling on the ability to be able to deploy capital. And so how big is that ceiling? Right now, from what we see, there are more deals that we could invest in than we have CEOs we're backing. And the reason for the second fund is we're undercapitalized, and to take advantage of those opportunities. Let me just give you like a data point. So in Southwest Michigan, and so that's not broadly what this is, not including Grand Rapids. In Southwest Michigan, there's 5,759 baby boom owned businesses that employ 72,000 people and 13 billion in sales. So let's market size that. So if you say 5,000, and you got 10% of that would be 500, and 1% of that you got to 50, and even cut that in half, and you got half of 1%, you got 25. That's still a pretty significant. And we're not talking about Grand Rapids, right? We're not talking about Grand Rapids. So the opportunity here is significant. So when everybody's like, "Oh, silver tsunami," it's in our experience that's true, and it's big. So I'd say it's limited in size. It's also limited in time. This baby boom movement is temporal. I mean, it's not going to be all one. At some point, that transition ends. So our sense is that we're still going to be able to do 2 to 3 deals a year at the size that we're looking at for the foreseeable future. And at some point that could run out, and we're going to cross that road when we cross it. But that's what we're thinking about it right now.
Doug, people will be shocked that you feel that the bottleneck is actually searchers, not businesses, as you just did the data for us. Because so many people listening to this will be in a search and will be getting nowhere, and being outcompeted and being really frustrated by the inability to find a business to buy. So interesting to hear that you're just got so many opportunities, but not enough searchers. So I guess I'm just calling that out. And call Doug, everybody, if you want to live in Grand Rapids or somewhere in Western Michigan.
West Michigan, yeah. I mean, West Michigan. I can think of a few offhand where there's not a great fit, and some of these are opportunities that are going to take some work, and they're going to be long-term plays that you're not going to get rich fast with us, and that's just the way that works. You're not going to exit in 3 to 5 years, and that's just how we're doing this, and we're incentivized to do that as well, and to think long term. So there are more opportunities, I would say, than we have aspiring owner operators right now in West Michigan. And I know for a fact from talking to brokers and other bankers, they know the search people. And anytime they hear a search person, they're like, "Do you have committed capital?" And then there's that kind of like, well, you're either going to be honest and say that you don't, or you're going to really have like committed capital. And so we show up. Everybody knows Sleeping Giant. I mean, it's becoming the fact that people know Sleeping Giant and in West Michigan, and they know we have capital. They know we're place based, and so there's just more opportunities you get exposed to, again, because you are place based. Nobody knows Sleeping Giant in Topeka, Kansas, or fill in the blank, but they do here. And so I think that's a relevance for our model, and it's why we get excited about the idea of Sleeping Giant being in other American communities, because the same things that are happening here are happening in other places in the United States where Sleeping Giant could be effective.
Yeah. Well, we are going to close with that in a few minutes. Sleeping giant. What does the name mean? I could hazard a guess, but why don't you just tell us?
Well, Derek would tell you this fancy story about, all these different meanings, but basically his hometown in Thunder Bay, Canada, has some island that is called the Sleeping Giant because there's gold under it. And he brought up this idea of the name. And I just like the name. The meaning, we could tell you a story about, it's sleeping giants in terms of we're buying these companies that are, could be giants, and, our
Right.
community, West Michigan, is overlooked,
Right.
and it could be and all these things work. But I mean, to be honest, we like the name.
Yeah.
And so and it gets confused with Sleeping Bear, because Sleeping Bear Dunes is very popular up in northern Michigan, in the Traverse City area. So that was really the impetus of the name.
That is a great name, whatever it means.
It can mean lots of things, but it sounds cool, right? Yeah.
Well, it sounds cool, and maybe the idea that anybody can project their own meaning onto it is useful. It's like it kind of engages you. It's like, what do they mean here exactly? And it it grabs you in that way.
Yeah, that's cool.
Makes you think.
I appreciate that.
We're going to start wrapping up here in a sec, Doug. But tell us a little bit about how you raise long-term capital, because now in my seat in Minds Capital, I'm very sensitive to the fact that when you have LPs, they want to know when they're going to get their money back. So, of course, there are pools of capital. Family offices are kind of the example that are much longer term, more patient. Think in terms of MOIC and cash generation rather than IRR. Is that the answer? Is it family office capital? Tell us how you went out and raised money.
Well, the answer is slowly and painfully, then all at once. And you're right, it's family offices. I remember the first time we were kind of proposing this idea of being place-based and long-term and this connection to university, and I got connected to a fund of funds I think it was in Illinois, and I'm pretty sure the person laughed at me, literally. Like, you guys are just absolutely morons of how you think that anybody's going to invest in this. And
because you weren't giving them
so
a 5-year,
and the TAM is small, and you got this university thing, and isn't that a distraction? And the litany of things of how this doesn't make sense, right? And so that was one of these moments that I look back on, and when we announce our second fund and we reflect on so far we've gotten it does give those moments do give you a little juice to keep going, of
chip on the shoulder.
A chip on the
sleeping
shoulder.
Don't wake the sleeping giant.
Don't wake the sleeping giant. Exactly. And so you're right. And so institutional investors, they see they see us, and then you add first time fund manager. That is the easiest no ever. Nobody's losing their job. Nobody's losing their job by saying, no to us. They're not losing their job to that. They're losing their job by saying yes to this thing. And so, for us, it was, you're place-based. So where are you going to raise capital? You're going to raise capital from the place. And so it's high net worth individuals, family offices that, and there's significant wealth here in West Michigan that saw what we're doing, believed in the long-term vision of what we could do, and could see this thing having this kind of compounding, growing effect. And I think also I think people are also done with this idea of that PE gives the returns back in 3 to 5 years. That's total bullshit. They're giving it back in 7, 10, 15. These things, why are there so many continuation vehicles and all this discussion? And so it's kind of fake talk about that being the case. There's some high performers out there that are doing that, no question, and kudos to them. But I think that's a myth. And then, I think the other fact is that you've seen a lot of long dated vehicles coming out from big funds that are these 15, 25 year term kind of vehicles. You got Brent Beshore over at Permanent Equity raising, $250 million with a 25-year fund. You got Cambric, which is a Warren Buffett protege, which is like massive long term. I think she raised a couple $100 million, and with the interest rate environment has definitely made that a thing that people are going to consider. And I don't think that short-termism is coming back. I don't think interest rates are going to zero where we had that kind of dynamic where you could buy in and financially engineer these things. I think that's over.
Well, there's certainly a very rich philosophical conversation to be had around short-termism versus long-termism, whatever interest rates are. Great, Doug. And then the Western Michigan tie-in, the searchers you partner with are actually not coming out of the school. So you're at the school as a professor, but what else is the tie-in now if the searchers are not coming from there?
Sure. So I run a program called Leadership and Business Strategy. We call it LBS. And what that program really is designed around is that it's a training experience that culminates in an engagement with a portfolio company of sleeping giant capital on a new market or new geography or new product question. And so that, we call it a practicum, is done here at Sleeping Giant downtown Kalamazoo. We take 40 students, we deploy them onto 12 teams, and we're going after exploring different markets that might produce outsized returns for our portfolio companies. They're not the growth initiatives that are staring them right in the face that they would be able to handle, or that are more sensitive to growth, but they're a little bit more of that kind of blue ocean kind of idea. And so we train up those students, we bring them in, and then my partner Derek and I work with them alongside the CEOs of portfolio companies. We bring in some executive mentors from McKinsey and from Bain. Sometimes we're exploring board members of these companies actually engaging. And so you've got investors, board members, alumni, executive mentors, and students all focused on creating more value and growth at these portfolio companies. And so, these are not student-led projects. These are not student presentations. I mean, they are coming in for a real, almost, private equity style kind of internship with us. Mm-hmm. And so, and that looks at like something where our students did 900 outreaches on new markets for one of our portfolio companies that resulted in like 100 interviews with potential customers, with suppliers. That has generated, meaningful opportunities where our portfolio companies have in part made decisions, capital allocation decisions, not as solely because of the work of what we've done with the students, but it has informed some of their decision making in a significant way to do that. And so, the students are sitting across me as the majority interest of the company. They're not sitting across from me. Yes, I am their professor. I am that, and so the level of value creation we can do with those students is much more. That said, they're students. These are undergraduates that we're working with on these engagements. And so there's headwinds there. And, is there some time wasted? Could I do this in a more efficient manner where we're providing some growth resources, some shared services to our portfolio companies? Absolutely. But our view is that this relationship can create value for us. It will create value for the portfolio companies. Our portfolio companies are getting internships, students out of this engagement. And so you look out and this is not today, but if we zoom ahead 5 years and we do 2 to 3 deals a year, and all of a sudden there's 20 companies here in West Michigan, I mean, we're gonna have our own career fair. Where we're going to get the best talent there. And so this flywheel effect you can start to see. And at the end of the day, our undergraduates then who aren't at Harvard, who aren't at Michigan, who aren't at Northwestern can go into an interview and say, well, I led a team of analysts on a growth strategy project for a private equity backed portfolio company. And when they say that line as an undergraduate, you can't say that line at almost any other school. And so it's a value driver for the university as well. And so these are how we've designed these two worlds to, create mutual benefit and had to innovate to make those things work.
Let's close with a discussion of how this could be replicated in other markets? Does it even make sense? Let's start with, say I wanted to do that in the Northern Virginia, a sleeping giant in the Northern Virginia area. First of all, who should I be? Should I be a investor, a capital allocator, or just an entrepreneur, maybe a searcher who would otherwise search for their own business? Who do you think a good Doug Lepisto would be?
We've had these conversations with some family offices in other geographies that see the value of our model, that see the same dynamic happening in their community. And so you want to engage with us in trying to develop this kind of model in another place. And so this question is top of mind. So the first thing is that place would need the five elements. It would need closely held businesses that need transition. Well, that's happening everywhere. You need local capital. It doesn't make sense for the coasts to invest in this. So you need people who care about place as investors. You would need a pipeline of aspiring owner-operators. Might come from a business school. Maybe it comes from a course like Acquire, but you're going to need that. Sleeping Giant, I think, has been successful in part because of that connection to the university. I mean, right now, the 3 of the 4 CEOs and residents we have are Western Michigan University alum. They came back after 20 years out professionally and have come full circle. So you need a regional university, and then the final piece is you need a GP, you need an entrepreneur, somebody to kind of spin up that model, somebody like me or my partner Derek. And so those are the 5 elements that you need, and there's a lot of places that have that. So how does one go about doing it? Where would they start first? I think it's somebody who needs to have really great relationships across a lot of different sectors that can pull something of this off. I mean, I am talking to professionals, I'm talking to businesses, I'm talking to investors, I'm talking to students, I'm talking to administrators, I'm talking to service providers, somebody who's really good at creating those networks, and I think is really critical. If you wanted to actually replicate what we're doing, you would need to be able to be both a professor or at least have a teaching function at a university, as well as the capital allocation and kind of business fund leadership as well. That doesn't need to be a tenured track faculty member. I mean, we were joking about this at the beginning of our call. There is really unrealized value in the fact that tenured track faculty, the curriculum is the jurisdiction of the faculty, and so if you want to bring in this LBS teaching component we have for undergraduates, you need some way of engaging your curriculum. We've explored ideas of how Western could be a part of that, but those are really some of the high level elements that you need to be able to start to pull all those stakeholders together.
Yeah. Let me press on the need, the tie-in to Western Michigan University, because while I can see it's added tremendous value in Sleeping Giant, I worry that anybody who thinks your model is really cool and would love to replicate in their market, if they don't have a similar tie-in to a local university, or there isn't a regional university there, that they'll say, "Oh, this isn't for me." And I wonder, and I think it could be. I think it could be, because those opportunities that you're providing your undergraduates, while super valuable and to them, and then also it kind of helps create this long-term flywheel. It doesn't seem actually to be required of the model necessarily. Is that fair?
I think it depends on what your investors want to see. Our investors, when we started this as professors, and we still are professors. And so when they saw the relationship and mutual benefit where they could get a great return and advance the university, they wanted that. And, the conversation I've had with, other family offices, for them, it's like, well, that for them, it would be essential, but really it's the capital that decides, right? And if you have investors that, that's not a meaningful thing for them, that's not essential. I know that we have conversations and get leads because of our tie to the university. And I could see that continuing. There's a lot of business owners who are Western Michigan University alum that we create good favor with, on the seller side, in addition to the talent side. But not essential. Wouldn't need to be done to have this place-based approach. I think people would also though question, it's like, well, what are you really doing? Kind of to the concessionary comment and impact comment. It's like, okay, great that you're buying all these companies, but like, what are you doing beyond that? Is there something else, other value you're creating? The social, what's the double bottom line in a sleeping giant without a university? Yes, you're keeping capital and talent local. You're empowering entrepreneurs in your community, and maybe that's enough. But it's really an investor capital. They're going to answer that question of what they want to see.
Well, certainly an association with universities have a sense of, they signal enduring, permanence. They're really ingrained and they're not going anywhere. So that some of that juice rubs off on you, if nothing else, right? You get to, it gives you that sense of permanence. You could also imagine that somebody.
Can I jump in there? So,
of course.
I mean, we have a gentleman named Mitch here that is there because of, Derek and I started a little podcast back in the pandemic. And he was looking for something. He was a Western grad, and he saw it because he's a Western grad. Well, now he's here, and the two gentlemen that we backed at Portland Products, they're here because our students reached out to them. So and we've had aspiring owner operators find out about and come through Acquire because they're the parents of our students. So in a kind of a more narrow view, the university is a distraction. I mean, what do you guys? But in another sense, there's a lot of value and a big TAM of relationships and networks you get access to.
Yeah, totally. Well, you could imagine if somebody wanting to do this isn't already associated with a university or an academic institution, that they reach out and create an association. George Mason here in Fairfax. You could imagine approaching them and saying, here's a model I'm trying to spin up. Would love to connect with your business school or your business students on this and figure. I don't know if universities work with outsiders. Maybe they only want to work with their own alum. But you could approach it that way. No,
you could. I can tell you from experience working with universities as outsiders, even if you are an insider, is very challenging.
Okay.
These are slow. I mean, so the criticism of higher ed having too much inertia and being too bureaucratic is true. And so how you work with an entity like that takes some finessing, let's say, and some persistence, but could be done. And for me, I just love, whether Sleeping Giant goes to another community or somebody's inspired by this podcast to start it in their own place, and whether Sleeping Giant monetizes or not, to me, the value is, I think we're doing a lot of good and we're impacting a lot of people in a really positive way, and we're making great money. And I just hope that to see the full potential of the model, get expressed where other communities can benefit from it. Like, I think West Michigan hopefully is.
Great. So let's call it there, Doug. Anything that we didn't touch on that you wanted to share with the audience?
No, I think that was great. That was fun.
Super. The URL, people can Google it, but just give it to us. For Sleeping Giant?
It's just sleepinggiantcapital.com.
Sleepinggiantcapital.com. We'll provide a link to that. We'll provide a link to your LinkedIn. Is that how you prefer people reach out, or
That's
is
great.
Email also
LinkedIn's
fine?
great. LinkedIn's great.
Okay, LinkedIn's great. Okay, super. We'll do that. Fascinating, Doug. Really, I really love the model. I love the long-termism of the model. I love the entrepreneurialism of the model, your innovation on some of the models that are already out there. So it's great. Thank you for coming on. Doug,
I appreciate it.
Lepisto.
That's very good. It's a lot of fun. Thank you, Will.
Hope you enjoyed that interview. Don't forget to subscribe to the Acquiring Minds newsletter. We send an email for every episode with an introduction to the interview, a link to the video version on YouTube, and soon, key takeaways, numbers, and more essentials from the interview for those of you who don't have time to listen or watch it. Subscribe at acquiringminds.co. You'll also find all our webinars there on the website, both those we have coming up and recordings of past webinars. At this point, there are over 30 webinar recordings, a wealth of information on all the technical nitty-gritty of buying a business. acquiringminds.co.